for investment A and investment B, all we did was just start adding up numbers until we got our money back. But that particular formula works best, and perhaps only when you have an annuity. Therefore, you have that periodic cash flows. Very good. Questions, comments, concerns, random thoughts? So far, so good. Anthony, how you doing? Awesome. Tyler, what was the next problem we did? Wow. Stuffing company D. What did we do there? What did we calculate? Accounting rate of return. How do we calculate an accounting rate of return, Evan?
It is average accounting income a project generates per period divided by the amount of investment in the project.
He read that from the page of notes that I've given. A helpful, what do I call that page? A helping hand? What's the label at the top of that page? Gesundheit. Some terms and definitions. Oh, okay. Some terms and definitions. So what's the formula I actually gave you, Whitney?
Average net income over original investment.
Average net income divided by original investments. And here, exclamation point, is the calculation that we do that doesn't use cash flow. What does it use? Net income. Okay? So this is the one calculation that we do in this section that does not involve cash flows. It involves income. Okay? So far, so good? JJ? Thumbs up. Awesome. JJ, what was the next problem we did? Who's sharing, Hector or JJ? You're sharing with JJ? You didn't bring yours. It's very sad. JJ, what was the next problem we did? Stuffing company E. This is sounding very redundant. What did we learn there? What did we calculate that was new? Profitability index. How do we calculate that, Chris?
Present value of cash flows divided by original investment.
Present value of cash flows divided by original investment. The book has you calculate it not based on present value, but on net present value, doesn't it? So use present, I mean, in some sense, use present value if it's given to you. If you're only given one or the other, use that one. Finance isn't, finance, and it's frustrating from a student's perspective, understandably so. There's not always one right way to do something in finance. Like a ratio. There's not even one right way to calculate every ratio in finance, which is kind of disconcerting. Can't you guys agree?
Yes.
But they can't. Am I speaking truth? Have you encountered this already?
Yeah.
You've encountered this already? Which ratio are you thinking about?
I wasn't thinking about specifically, I just remember.
That they do that to you? Yeah, they do that to you. That is not nice. That is not nice. That there's more than one way to calculate a ratio of the same name. That is capital budgeting. That is why there are lots of problems on the exam, is because there's lots of different areas. And I would guess there's at least one of each on the final, just because I like to be nice like that. Questions, comments, concerns, random thoughts? What's the next section we're going to study then? Kristen, what's the next section? What's the next thing we're going to review? Standard cost? His and her staples attached at the hip. We called it a bench, didn't we? We kind of called it a bench, but it can also be, but it sounds a little more creative, I guess, to think of his and her staples attached at the hip. No? What am I talking about? What page in the handy handouts should you be on? 13, and then if you, you're looking at that, but look at this. Stop. If you go back, his and her staples.
Oh, well, that makes sense.
His and her staples attached at the hip.
Those aren't staples, but continue.
They kind of sort of look like staples.
No, it's more like a table-looking thing. Yeah.
Something. That picture just defies description. And his and her staples attached at the hip is at least more entertaining than some of the alternatives.
I guess.
No? Oh, I mean, it's not awesome possum, but, you know, not everything can be.
Right.
Okay. What letters go underneath, Brett? What words, letters go underneath?
All of them?
All, of course. I want all of them.
AQ times AC, you want me to say what they are?
Say what they are, please.
Okay. Actual quantity times actual cost, actual quantity times standard cost, standard quantity times standard cost.
Yes, very good. Actual quantity times actual cost, actual quantity times standard cost, standard quantity times standard cost. Nicole, what are they?
Actual quantity times actual cost, actual quantity times standard cost, and standard quantity times standard cost.
Standard, very good. She did just as good a job. And so you want to make sure this is in your cheat sheet, okay? You don't have to memorize this. Those of you who take me for cost accounting will, but it becomes, it's, you know, I structure it like I do because it's the same for both direct materials and direct labor, so it's one thing to memorize. Okay, so make sure this is in your cheat sheet. Are you ready? This is serious stuff, so I'm gonna set the cards down. All together now, what is standard quantity? The standard allowed for an actual output. Now, Kaylee, you didn't say anything. All together now, what is standard quantity? The standard allowed for actual output. JJ, you didn't say anything. All together now, what is standard quantity? The standard allowed for actual output. All together now, what is standard quantity? The standard allowed for actual output. Kaylee, what are you writing?
Writing that down.
What is it? What is it? What are you writing down?
The standard quantity.
And how do you calculate the standard quantity?
That's what I'm writing it down.
Well, what is it? You don't know? The standard allowed for actual output.
In units.
In units! Yeah. You got it? The standard allowed for actual output in units. Why the silliness?
Because you really want us to remember it.
Yes, because people screw it up a lot. And I don't want you to screw it up. I'm trying to help you do better on the test. Standard allowed for actual output, it suggests what type of math. Standard allowed for actual output. Ashton, do you recall? Multiplication, right? So we're multiplying the standard allowed times the actual output. And the actual output is in units, right? So the standard allowed is a per unit standard allowed. And will it have a dollar sign in front of it or not, Rebecca Carter?
No,
One of the two.
because it's a quantity.
It's a quantity, so it will not ever have a dollar sign in front of it. Never. What will have a dollar sign in front of it is